Good afternoon and welcome to Wealthy Wednesday, our series on financial education and empowerment. Just before we get started, I want to remind people to please register. You'll see the link below. Uh, we are giving away gift card prizes for participation and for registration. So again, the link below, please sign in and register so that we know that you are here and you can be put in the pool for a prize. If you missed our first session, I encourage you to check out our page and look into how to create an emergency fund. We shared a lot of useful and practical tips there. So I'd like to introduce our panel of speakers here to get started. We'd like to welcome Michael Cheatham. He resides in the city of Detroit and was educated in the Detroit public school system. He attended the University of Michigan and served in the Army Reserve. After college, he joined Comerica Bank and has spent nearly 20 years working in the banking center system. He is a very active member of the community, and in addition to his extensive work in the area of financial education, he serves on the board of directors for several nonprofits and community-focused professional associations. So welcome, Michael. Thank you for joining us and sharing your expertise with our audience. We also have Glenn Wilson, who is president and CEO of Communities First. He is the co-founder and leads the organization as it responds to the great need that distressed communities face in regards to economic development and affordable housing. For the last 10 years, the organization has been working to improve communities and has invested more than $30 million in funding, primarily in real estate development projects, as well as providing jobs. His background is in healthcare, real estate, business, marketing, and entrepreneurship, which has translated well into his real estate development work. And Glenn serves on a host of committees and boards, maintaining strong relationships across the state and across the community, and has been recognized for his work. So welcome, Glenn. Thank you both for joining us. And I will turn it over to Glenn, who will talk about why this series is important.
Right. Well, thank you so much, Renee, and for the introduction, and thanks, Mike, for being here. Part of the reason why we're here today is, it has a lot to do with Renee, that's on the screen right now, that's moderating the conversation. We were talking about, as an organization, what we need to do to respond to COVID. So Renee spent some time as we were getting things in from the community, questions from individuals, from businesses, and she put together a great series of workshops so we can respond as an organization, because our name is Communities First. So in order to have a name like that, we can't sit to the side and just wait on things to happen. We have to figure out what do people need, and we have to respond to that in a fast way. So thanks, Renee, for helping put together this whole series. And so we're going to be talking about, credit worthiness today. Please, if you're watching this, share it, right? That's the other thing about information. One of the things about having access, one of the biggest problems that you have in any community is individuals do not have access to information. So now you have the ability to not only get the information, but also to share it. So because this is on social media, this is an open platform. So please go down to your screen, hit the share button, do a watch party, invite other people to come learn the information that you're going to learn today, because it's going to help you not only save money, but also set up the foundations for your family to be able to save money over a long period of time. Credit is very, very important. A lot of people look at credit as something, and Mike will probably talk a little bit more about this, and we'll talk about it, I know, once we get into it, but credit is one of those things that people evaluate your character off of, whether you want to pay attention or not. People look at that as your guiding principle. And so it's very important that you have strong credit. And we're going to give you some tips and tools today and some tricks and things that you can do to make sure that you're setting yourself up for success. So please share it, sign up for the URL link, the tinyurl.com/CFI Building Wealth. So you can get more information about what's going to be happening. And even if you can't finish watching it today, come back later and share it. So we appreciate you guys tuning in today.
Thank you, Glenn. So as we get started, let's begin with the general definition of what credit is. And Glenn touched on this. It is a reflection of your ability to pay. It's used as a tool to determine the level of risk based on your history of financial habits. And so we're going to talk about how credit affects where you can live, where you can work, how much you pay, and what types of tools and capital you can access based on that. So before we get started on a PowerPoint that Michael's going to share with us, I'd like you both to share a personal story, a life lesson about either ruining and or building your credit that our audience can possibly relate to and learn from. Michael, do you want to start?
Sure. One of the questions, one of my stories is something that I'll touch on a little bit in the PowerPoint as well. When I was in college, I got my first credit card, and I did pretty well in terms of paying it. But what didn't occur to me is that when I went home for the summer, I needed to change my address, which I didn't do. And so I got a call after being like 35 or 40 days late. Hey, Mr. Cheatham, you haven't made a payment. And, I thought about, well, why wouldn't I have made a payment? I thought I paid my bills, but it occurred to me again, I wasn't getting the statements because, I hadn't changed my address. And so initially my ego said, wait a minute, that's your fault. You didn't, and it occurred to me, hey, I'm an adult. It's my job to make sure that I maintain correct records with important organizations and partners of mine. And so once I did that, the other thing was that because I had a good history with them, I was actually able to get them to refund the late fee and also remove the late from my credit report. And again, that's something that I'll talk about. So in a nutshell, I would say, don't be afraid to talk to your creditors. Do not be afraid if you're in trouble or going to have some issues to let them know up front. Be proactive.
Thank you for sharing. I think we all have a story from college, I think, that we can
Yeah.
Glenn?
Yeah, I was over here running through my mind which one I want to tell. But I would say similar to Mike, growing up, a single family household, my mother, was always working. I was always busy. I remember getting a credit card when I was in college, very similar to Mike. And, I'm thinking like, oh yeah, this is great. I got a credit card. I'm building some level of credit, but what I didn't realize is that just because I was paying a bill or paying the minimum monthly payment or trying to pay a little bit more, it really wasn't helping my credit. So I was like, well, how am I making these payments in my credit score? And like I was kind of paying attention to my credit score, but it was probably like once, pay attention once, maybe twice a year. I really wasn't being super focused in on it. And then I remember when I was getting a business loan when I was starting a business in college, and I had went to talk to the credit officer and have a conversation with them and say, hey, I'm starting this limousine business. I need to get some credit. I need to do these other things. And they kind of looked at me and was like, okay, well, your credit score, I don't know what it was. It was like a 620 or something like that. And they were like, well, we can't give you a credit because because you're using all the credit that you have available. So, you would be considered high risk. And I'm like, well, I'm paying it off, most of the time. I'm doing this, I'm doing that. And so I started really kind of paying a little bit more attention to my credit over time. And even though, I've had ebbs and flows, I got a little bit more involved. And so I can really say, when I say I really took it up to the next level, probably about maybe just say 15 years ago or so, where I really started honing in to try to say, what can I do to like perfect it, right? So if you're not intentional about your credit and you're not intentional about building it, it won't get built, right? And then also what I found out is that you don't need people to help you straighten out your credit. And it's nothing against companies that do this. And I'm so sorry if you're watching this, but I've talked to people day in and day out and show them small things that they can do themselves to go what they pay people thousands of dollars to do. So that's what I'm trying to tell you. The information that we're going to give you today, and some advice that we're going to give you, you do not have to pay somebody to show you how to do that. Like, we're going to give you some tips and tricks today and show you how to go on, because come to find out, I had things on my credit. I have a sibling that has a very similar name to me. And so I started finding out that certain things that were on their credit that was supposed to be on their credit was on my credit, right? But because I didn't really pay attention to it, it was just sitting on my credit for like 7 years. And then when I found out, I was like, hold on, that's not mine. I didn't buy that. What is going on? And then I had to end up going in and disputing things. So credit is all about you paying attention, being intentional about building it. And so for me personally, once I really started taking it to the initiative, taking the initiative, like, you can take mediocre credit, you can take bad credit, and you can fix it. So just like it takes you time to destroy it, no, it's going to take you time to fix it. But once you fix it, you're going to greatly appreciate it once you get it back.
Thank you, Glenn, for sharing your story and also those tips as well. So let's go ahead and get started. We are pleased to have Michael here with us, again, coming from Comerica Bank, and we appreciate Comerica's sponsorship of this series today. And Mike is going to go through a presentation on credit. So let's go ahead and get that set up. And you have the floor, Mike.
Well, thank you. Let me say, I've been with the bank now just over 26 years. And the first thing I learned when I walked in the door is this stuff ain't that hard. The problem is, unfortunately, in our society, it's talked about in a way that makes it seem more complicated than it really is. And so I dedicated myself to going out and sharing this information, much like Glenn said, to make sure that people are empowered, and I try to deliver the information in a way that makes it accessible for everyone. So in general, in order to take control of your money, you need to have a plan. As Glenn said, you need to be intentional. You also need to make sure that you are saving. And in the financial education world, we call that paying yourself first. So whenever you get any sort of income, you want to make sure you pay yourself off the top. And I'm sure that'll be a topic for another session, so I'm not going to spend too much time in that. And then you want to budget. So a budget is simply a plan for how you spend your money. So you build saving into your budget. And most importantly, for today's conversation, you want to make sure you understand credit. And I want to say to people out there, many of us have heard or said, I don't want to be involved in credit, right? And that's fine. But before you make that decision, it's important that you understand how credit works. Because unless you're independently wealthy, not using credit will make it difficult to accomplish many of the things that we here in America take for granted, such as buying a property, vehicles, things like that. So the first and most important thing I want you to think about or remember is that credit is a tool. If we were live today, I would have brought my good friend my shovel from my garage. And what I do is I take that shovel and I pass it around to the audience. I tell everybody, or people, hey, touch this. And then I go back to the front and then I say, okay, did anybody die? Did anybody get shocked? Did anybody faint? And the idea there is that credit, like that shovel, is just a tool. It is just a tool. Now, It can be used to build great things, but it can also be used to dig your grave. But it's up to you how you use it. And so our goal here, and whenever we do these types of sessions, is to make sure that people understand how the tool works. Because by itself, that shovel, just like credit, is nothing to be afraid of. So let's talk about who looks at your credit. Now, you probably have already figured out that the first people that look at your credit are people from whom, or organizations from whom, you are trying to get a loan. So when you fill out that application, you put your social security number on there, your birth date, and so on, and apply for a loan, they're going to look at your credit. The next situation where people look at your credit is when you are considering purchasing insurance. Those of you that are from Metro Detroit, you're very familiar with the issues around insurance in the state of Michigan, and specifically in the city of Detroit. Well, whether we like it or not, your credit score is an indicator of your risk, or the risk associated with doing business with you. And so a higher credit score means that you actually pay less for insurance, as well as loans and other things that we'll talk about later. The third area where people look at your credit that a lot of us are not necessarily aware of or don't think about is for employment. For employment, because again, your credit score is considered, whether you think this is fair or not, your credit score is considered to be an indicator of the risk associated with doing business with you, and in this case, bringing you into that business. So if all things are equal, if all other things are equal, and there are two candidates, one with a high credit score and one with a low credit score, the business is more likely to hire the person with the higher credit score. Said in a more plain way, your credit score is also an indicator of your financial strength or distress. And so a low credit score is considered to be an indicator of a high financial stress. And high financial stress is an indicator of financial issues. And those financial issues, as an employer, we don't want to necessarily bring those financial issues into our business. And so again, your credit score can affect a lot of things, but in this case, the thing that most people don't think about is it can also affect your employment. And it's not like the employer will, or potential employer will call you and say, hey, you were the best person for this job, but we couldn't hire you because of your credit score. That does happen sometimes, but usually they just move on to the next candidate. As I talked about, when you're applying for a loan, you're giving a lot of personal information. So what you want to do is you want to be very careful about who you're applying with, and also how you're applying. So even though the organization that you're applying with might be a reputable organization, if you're going through an unsecure website or filling out paper that's not being secured, you can be putting yourself in danger of someone stealing your identity. And we'll talk a little bit more about your identity in a moment. But finally, as Glenn said, your credit score is your financial reputation. And for those of you that have graduated from middle school, you know that people talk behind your back. Well, the great thing about credit is it's one of the only areas of your life where you can actually control what people say about you. So we've talked about credit reports. So there are three organizations that collect credit information and create credit reports. Those are TransUnion, Equifax, and Experian. There's TransUnion, Equifax, and Experian. They're the ones that collect information from the people that you borrow money from, usually, or companies, not necessarily individuals, and they take that information and compile a report about how you manage your credit. Many of you have heard the term or name FICO. Well, FICO stands for the Fair Isaac Corporation, and that is just a company that created a computer system that takes credit information and converts it into a score. Now, there are other organizations out there. I think Vantage is probably the next most popular, that actually create credit scores, but FICO is kind of the gold standard amongst traditional banking. And so we're just going to talk about that, talk about FICO here. Also know that generally speaking, FICO and Vantage and other organizations use kind of the same model to calculate your credit score. Okay, so This is how your credit report or how your credit report is created and then converted into a score. So you first have your creditors. Those are organizations that you have borrowed money from. They then in turn talk behind your back. And what they do is those creditors talk to TransUnion, Experian, and Equifax. Those organizations put that information into the FICO scoring system, which then creates your score. Now, I'm going to debunk the first myth that you may have heard. You probably have heard that you are eligible to receive one free credit report per year. That's not true. You're actually eligible to receive 3 free credit reports per year because each one of these organizations has to provide you with a report. And so what we suggest is that you not order all of them at the same time. And the idea there is that criminals don't usually get together and say, you know what, in March, we're going to get together and steal Mike's identity. So what you want to do is spread out your requests for those reports so that you can see throughout the year what's going on with your credit. So in January, February, maybe you get your TransUnion report. In July, August, you get your Experian report, and then November, December, you get your Equifax report. And again, that allows you to see throughout the year how things are going on your credit. It allows you to catch potential fraud, and it also allows you, for those of you that are rebuilding your credit, to make sure that those things that you fixed have actually been adjusted on your report. So this is how your score is determined. And as you see from this graph, the most important thing is your payment history, your payment history. And when we're talking about your payment history, I like to speak in terms of 2 clocks, CLOCKS, 2 clocks. The first clock is your actual due date, the actual day when you are supposed to have at least your minimum payment to the creditor. So for this particular example, let's assume that your due date is on the 15th of the month. So as long as you have your payment there, your minimum payment on or before the 15th, you get a check mark or a happy face. That's the first clock. If you are a day or more late, or your payment arrives to the creditor a day or more after the due date, then you have opened yourself up to what we call a late fee. And that is just money you have given away because you did not get your payment to the creditor on time. You might as well have just taken the money and put it in the middle of the street and walked away from it, because it doesn't help your credit. It's just a penalty for not making your payment on time. But you'll notice I have yet to talk about how being late affects your score, because being late does not affect your credit score until you are 30 days late. 30 days. And just because I know I have some technical people out here in the audience, I will say it's 30 calendar days, not business days. So you don't get any breaks for vacations or weekends or holidays or any of that. It's 30 calendar days. Once you are 30 calendar days late, then it affects your credit score and you get a sad face, right? So let's talk in terms of happy and sad faces. As you see, with a happy face, you got your payment there on time, you get a plus sign. And plus signs do what to numbers? They increase them. So by making your payments on time, you are increasing your credit score. A sad face, again, you have negative signs. Negative signs do what? They subtract from your score and lower your score. But as you will see, as you see in this graph or in this slide, an on-time payment, excuse me, a late payment hurts your score much more than an on-time payment helps your score. I'll say that again. A late payment hurts your score much more than an on-time payment helps your score. So that's why you only have one plus sign, but a bunch of minus signs. So if you are late and you've already paid the late fee, please get your payment in before the 30th day. Because now you will have not only paid a fee, you will also be really damaging your credit score, because again, that is 35% of your score. Now, this also goes back to where we were talking about being proactive, where what you want to do is make sure that if you're going to be late, if you know you're going to be late, call your creditor ahead of time and let them know I'm not going to be able to make my payment on the due date. And the idea here is you are basically setting yourself up for a later conversation. So you call them and you say, I'm not going to be able to make my payment on the due date. And generally speaking, they will say, okay, when do you think you'll be able to make your payment? And you give them that date. What you want to do afterwards is you want to call them back after the payment, after you've sent the payment, and confirm that they received it. Once you've confirmed that they received it, then you want to have a conversation about the possibility of having that late fee refunded. Now, I can tell you, if you already have a good track record with the organization, they are much more likely to refund that fee versus someone who is late all the time. So keep that in mind. And as I mentioned in my personal story, depending on the history you have, let's say you go past 30 days, they do have the ability to remove that 30-day notice from your credit report and thus remove all of those negative signs from your score. But again, you have to have maintained a good history with them leading up to your particular issue. Also understand that because of COVID-19 and everything going on with the pandemic, most creditors are offering some sort of support or help for people who are having issues making their credit payments. So I would suggest that you reach out to your creditors if you're having an issue to discuss what options may be available so that you can protect your credit. The next most important is your amounts owed. Sometimes that's called utilization. And for utilization, what we're really saying to you is you may have a credit limit, but what you don't want to do is use all of that money. So if you have a credit limit of $1,000, you're actually going to hurt your score if you use $900 of that $1,000. The magic number is actually 30%. So if you can stay below 30% of your available credit, you can avoid damaging your score. But this is a great opportunity to introduce this. And this is something else Glenn said. Your score is not etched in stone. It changes over time. So you may have a month where your hot water tank went out, you had to get a new transmission for your car. So now you owe $950 against your $1,000. So if you look at your score that day or close to that time period, your score is going to be lower. But then in the next month, when you pay it down to say $200, now you're below the 30%, your score will start to come up again. So understand that no matter where you are today as it relates to your credit score, you can make changes to improve it. The third most important thing is the length of your credit history, and that's simply how long have you had a credit report, had a credit history. Your new credit is of credit that you have, how much of it is more recent. That can also affect your score. And then finally, your credit mix, which looks at the different types of credit that you have. I'm not going to spend a lot of time here, but in general, it is better to have multiple types of credit than just one type of credit. So it's better to have a credit card, a car loan, and a mortgage versus just having 3 credit cards, for example. So some final thoughts. Most important, 35% of your score, pay on time. By the way, pay on time, because again, not only are you affecting your score after 30 days, if you're 1 day or more late, you just gave away some money. And I don't know anybody who just likes to give away money. So do all that you can to get that payment in on or before the due date. But at the very least, don't let it go to 30 days. Next, don't max out. Again, you have a credit limit. This is how much they're willing to loan you. That does not mean you have to use it all. Now, again, I recognize that there are situations where you are going to need to use it, but just understand that maintaining a high balance against your credit limit will hold your credit score down. So if you're interested in trying to improve your credit, understand that that is one of the ways that you can improve your credit by chipping away at those balances and getting them below 30%. Also, it is your reputation. Remember, whether we like it or not, our credit score is used as a determinant of our financial skill, our financial position, and ultimately our reputation. And so if for no other reason you want to protect your credit so that in the areas that really matter, when we talked about, being able to buy things like cars and houses, being able to get better or the best insurance rates, and also being able to actually get a job. All of those things are affected by your credit. So by protecting your credit, you're protecting your reputation, which ultimately will help you be more financially empowered. And finally, remember, credit is a tool. It can be used to build great things, but it can also be used to dig your grave. It is up to you how you use it. And using the tips that we talked about today, you will be in a much better position to leverage that tool of credit to accomplish your financial dreams. Thank you.
Thank you, Michael. And just
You're
a
welcome.
reminder to those that are tuning in, if you have questions, please put those in the feed and we will get to them. If for some reason we are not able to answer your questions, please make sure you register so we can follow up afterwards. And we will also be following up with additional information. So please register. Michael, we do have one question from an audience member that would like to know the difference between using Credit Karma and actually ordering the individual reports. Can you speak to that?
Well, the first thing that you should know is I've heard this out there, that people need to understand that if you are ordering your own credit report or your own score for that matter, that does not negatively affect your credit. That does not negatively affect your credit if you are ordering it for yourself. Credit Karma, I believe they used a Vantage score, although I've not delved deeply into it. But in general, I think that any way that you can get a copy of your report is fine. You just want to make sure that you're not paying a fee for it, first of all. Now, you may pay a fee for your score, but in terms of getting your report, you should not pay a fee. I usually suggest that people go to annualcreditreport.com. That's annualcreditreport.com, because that is the one that is endorsed by the government and also is where the 3 credit reporting agencies have agreed to work together to make your reports accessible. So when you go to annualcreditreport.com, there is a sublink to each one of the 3. So what I do is I go to annualcreditreport.com, I pull one of the reports, and then I just make a note on my calendar that in February I got my Experian report. So now in July, I know when I go back that I don't pull the Experian report, I pull the TransUnion or Equifax report.
Thank you. Again, if there are additional questions, we will address them as we move through this discussion. Michael, I want to thank you for that presentation. And go ahead.
Can I add to the Credit Karma?
Mm-hmm.
Can I add to the Credit Karma? Okay. So with the Credit Karma, and like you said, it's the Advantage. That is an Advantage score, Mike. So you were absolutely right. What they're using is the Advantage 3.0. But what you're going to realize is when it comes to FICO and different Advantage scores is that different creditors use different scores. So everybody doesn't use the Advantage 3.0. And you could do more research on that. That's why Mike was saying earlier that your FICO is more important than your Advantage score, because what you will find out is Credit Karma is good, but when you use the Credit Karma and it gives you a score of Advantage, you can have just say a 700 on Credit Karma and you think you're doing great, and you can go to the bank. Okay, like this has happened to people, and I tell them the difference. You can go to the bank and they'll pull your FICO score and it'd be like a 600 or a 580. Like your points could be drastically different between your Credit Karma and then what your FICO, even though what it says the advantage is because you have like FICO 4, FICO 7, FICO 8. They got all these different FICOs for car loans. You have a FICO for mortgages. You have a FICO, and then some of them do averages. But we'll talk more about that, as we get through some more of these questions. But I just wanted to say, Credit Karma, there is a difference between those. So it's better to have more than one way to check your credit. So Mike was already mentioned that about the annual credit score.
And we should also say, keep in mind too, that your score is not on your report. Your score is not on your report. So just getting your report will not give you your score.
Yeah.
Thank you. All good points. We have another question that just came in, and perhaps you can speak to the relationship between building personal credit and building business credit?
I'll take a quick note on that. Unless you are a very large company, a very large organization that's been around a long time, your personal credit is your business credit, because the science says that you will run your business the way you run your personal life. And so if you're having trouble in your personal life financially, you're going to probably try to solve those problems through your business. If your business is having trouble, you're likely to use your personal finances to help solve those issues in your business. So because of that, again, unless you are a very large company, a very well-established company, anybody that you borrow from for your business will also look at your personal credit.
Yep. Mike, thanks a lot. And then also to add to that, there is a difference between your personal credit and a Dun and Bradstreet number credit that some banks pull, like when you're talking about if you're a larger organization. Now, one thing that you can do, well, as a private owner, you're going to have to sign private personal guarantees anyway. So so Mike already mentioned that. So if you heard of a bank saying, we want you to sign a personal guarantee for a business loan, usually the best way to try to build your business credit versus building your personal credit is, say if you go into the bank and I'm just giving you an example. I'm not telling you to do this, not being a financial advisor, but I'm just giving you an example. But if you go into a bank and say, I want a $5,000 unsecured or secured line of credit for my business, and then they say, well, your business does not have credit. What you should do is get a Dun and Bradstreet number. And a Dun and Bradstreet number is a credit number for your business that you can get, that you can give to the bank, and they'll report out on you making those payments on that secured line that you are personally guaranteeing to pay that loan off. Now, as you build that up, depending on the loans that you pay off, if your Dun and Bradstreet has enough credit on it, banks will look at that to be able to start being able to provide your business credit. But you're going to at least need 3 years, I would say. And Mike, I mean, wouldn't you say at least 3 years of consistent, business credit for somebody to really look into that? But they're still always going to make you sign a personal guarantee regardless, but the guarantee won't be as strong.
Well, it's been my experience that your personal credit and your personal cash flow
Right.
are probably even more important than, say, your Dun and Bradstreet number. But
Mhm.
again, especially for entrepreneurs, and that's who I'm really talking to. For
Okay.
entrepreneurs, your personal credit is your business's credit.
Mm-hmm. Yep.
Is your business credit. But I would suggest, to Glenn's point, before you even start an application with a financial institution, have these conversations. You want to have these conversations about exactly how they go about doing what we call underwriting for the type of loan that you're interested in, so that you can make an informed decision about even who you apply with.
Thank you. And we have a couple of more questions coming in. Someone has an issue with companies closing their accounts for lack of use, and it ends up impacting their credit history. What can they do about that?
I would suggest, first and foremost, if that happens, they usually will send you a letter before they do it. So, because they would rather have you as a customer. If you already have a good payment history and they're just closing it for dormancy or lack of use, when you get that letter, you call them. That's the first thing. Second, go out and buy a pack of gum. Generally speaking, or something cheap, generally something to put some activity on, and that usually will hold you for another year at least, if not longer. But call them as soon as you get that number. If they've already closed it, as soon as you find out, I would call them and see what your options are about them reopening it. But very rarely do they do that without trying to contact you first.
And how can someone build their credit if they don't have any revolving lines? What are your thoughts on getting a secured card?
Oh, if that was for me or for either of us?
Oh, I think it's for both of us, but you can go first, Mike. Go ahead.
Okay. I would say I like that. That's one of the ways that you can build your credit, is to get a secured card. And for those who are not familiar, the way a secured card usually works is that you actually send money to the organization and they put it into a savings account let's say $500, and then they send you a card with that limit. And what happens is you use that card like a traditional card. You go out and you buy things, you make payments. That money just sits. But the idea is they're holding that money because you don't have a credit history, so that if for some reason you default on your card, they have some money to go back and get to make themselves whole. Generally, what happens is after 6 months to a year of a good history, they will actually mail you that money back with interest and allow you to keep that card as an unsecured card or put you into a different program where they send you another card. So yes, I like secured cards if you have the funds to do that.
All right, and Mike, just adding to that about the secured card, there's another thing without the card that you can also do with the bank is just get a secured line of credit. Yeah, which is a secured line of credit, which operates similar to a card. But the secured line of credit, you basically go to the bank, you write them a check for $1,000. They'll basically give you the $1,000 right back. And so what I've told people to do with that is because once you pay it back, it just releases your money. So if they give you $1,000, so you give them $1,000, and then they give you $1,000 right back, then take that $1,000 and basically make the payments on that $1,000 of the unsecured, whatever that 12-month is. And then at the end of that month, you'll get your money back. So if you just pay attention to how this secure line of credit works, it's just using money that you already have to make payments. So the secured credit card is a great one. And then a secure line of credit is also another tool that you can use to build credit. I mean, there's some other ones.
Secured loans.
Yeah, the secured loans. Yep.
Yeah, just a regular secured loan
Yep.
where you go in, you put some of your money into an account. I think the smallest ones I've seen at nonprofits can be as small as a couple of $100s, I believe. And what you do is you place that money in the account. You make payments on that loan as if you had just walked out of their door with that $500 or so. And as you do that, they report to the credit reporting agencies and you get your happy faces.
Right, and make sure when Mike would mention that earlier about nonprofits, with especially with CDFIs and some of them that do that, make sure they report on your credit, because what else has happened is that you've had certain banks, if it's not over a certain amount, they won't report the loan on your credit report. So make sure when you go in, before whatever bank you're working with, make sure that you're asking, if I do this secure line, will you be able to report this on my credit report? Because some people will just take your payments and then they'll wait till the loan is paid off, and then they'll report it that you had this 12-month history, because they don't want to input that information because the loan is so small. So make sure that you still ask them to do that each and every month. Oh, they'll report it, Mike, like when you said earlier about when it's late. So if it's late, but sometimes
Right.
they won't ever report it if you make the payment. So that's why sometimes people, I don't know if you noticed this, but if you have a small loan and you'll be making a payment on it, you'll be like, why don't this loan show up? And then they'll finally report it 7 months later. And you'll be like, oh, they're the loan. Okay, they finally reported it. But as soon as you're late, they'll report that 30 days late, like Mike said, and it hurts your
Absolutely.
credit. So
Yep.
make sure you ask them and let them know that you want this to be reported on your credit on every 30 day to show that consistent payment history that Mike was talking about earlier.
I'll just add two things. I heard CDFI mentioned, and for the audience that is not familiar with that term, it stands for Community Development Financial Institution. And then I'll just add another method for individuals that aren't interested in necessarily or ready to get a line of credit or credit card. Oftentimes you can have your rent reported to the credit agencies. So if you're timely with your rent payments, you can use that to help start building your credit as well. All right, so those are all the questions that we have coming in at the moment. If we have any more, we will jump to those. But we do have a couple of discussion items that we'd like to go over. And one of them is if Michael and Glenn, you could speak to what some of the pitfalls are that people should avoid. And I know some of those suggestions came up earlier, but if you have some pitfalls that people should avoid, Glenn, I think you mentioned something earlier about paying people to, fix your credit. And what are some of the other pitfalls you commonly see?
Well, for me, as far as for pitfalls, one of the things, right, is one is paying people when you don't need them to pay, when you don't need to pay people to fix your credit. Another pitfall that I see is individuals that want to ignore it, right? It's like I just don't want to deal with it because it got so bad. You think that you can't fix your credit, and then you have this sense of shame, right? And so, like credit shame, and you feel like and people make you feel as though because you have bad credit that it can't be fixed, or you feel like because it's so low. So I would say getting over credit shame and just saying that there's a way to fix it. And I think Mike mentioned that earlier, is get on the phone and talk to your creditors. So like right now you're going through COVID. One of the worst things that you can do is to avoid your creditors through a time where you can actually reach out to them and ask them for some relief. One of the biggest things is don't be afraid to ask people for help. Don't be afraid to go in and talk to your creditor and say, hey, look, I lost my job, and it's fine if you tell them you lost your job. If you're looking for another one, ask them for forbearances. If you need 2-3 months where they'll put it onto the back part of your loan. Some people, depending on your cash flow, will restructure some debts you have if you're able to ask them for it. If you want to close out accounts, try to settle. Some people don't know that they can settle accounts for less than the amount owed. Also, one of the other biggest pitfalls is people put things back on their credit and I'm going to tell you a little tidbit trick real quick about a pitfall. So to give you an example, if you had something on your credit for 7 years, right? I don't know what that could be. If the creditor reaches out to you after 7 years, I mean, this is like a Michigan statute of limitation. So it's like understand the statutes of limitation in the states that you operate in. So if this creditor reaches out to you after 7 years, they'll sell your credit. Every time you make a new payment arrangement, that 7 years starts over for them to be able to recoup that debt. So you have to find out what those debts are, what the statutes of limitations are on those, because you will find out is that if it's outside the statute of limitation date, that you have more negotiating power with that creditor, because they know after a certain period of time they can't take you to court, they can't garnish your checks. So one of the biggest things that I see people fall in is they keep restarting this clock of statutes of limitations about collections instead of understanding the dates where they're at and then understanding how to get those debts paid off for the lesser amount than what was owed. I keep going on this, but Mike, please, I know you got some more stuff.
Well, actually, I was just going to say there's a couple of things I say when I talked about how I try to deliver information in a way that's accessible to people. What I want you all to think about is think of you and your siblings or your family members or friends that you have borrowed money from or that they borrow money from you. Generally speaking, if I am supposed to pay you some money on Friday, I usually know like Tuesday or Wednesday that I'm not going to have it. So what you should do is you call that person and say, hey, I'm not going to have your money on Friday. Let's talk about what we need to do or what I can do to get you your money as soon as I can. Think about how you would feel about that person if they called you ahead of time. Somebody owed you money that they were supposed to pay you on Friday. Think about how you would feel about that person if they called you Tuesday or Wednesday to tell you they wouldn't have it, versus you having to try to track them down next week to get the same information that they're not going to be able to pay you on Friday, right? So businesses are the same way. Creditors are the same way. It helps you to be proactive, to let them know, look, I'm not going to be able to make my payment when we had agreed that I would make that payment, because they're much more likely then to work with you. To Glenn's point, also, at the end of the day, if you owe somebody $1,000 and you've basically made it clear you're not going to be able to pay them the $1,000, they would take 700 possibly or 500, but they're not going to offer that. You have to be proactive and have those conversations.
And I would just add, as a pitfall or something to seriously consider, is co-signing and impact that has on your credit, not just your credit, but also your relationships with people. So I'll leave it at that.
Well, I mean, how many people do we know that can't go to grandma's house anymore, right? Or who don't talk to their cousins anymore because of that situation. So yes, when you co-sign, you want to go in with your eyes open, because you are as responsible for that debt as the person who signed first.
And Renee, I'm so glad you mentioned the cosigning. Yeah, because that's definitely a huge pitfall. Another one that people fall into is trying to use credit to pay for things that they can't afford. And so don't fall into the pitfall of getting credit cards to try to buy things that you already know you can't afford, which happens. And you know, people still do it each and every day where they're using credit cards to fund their lifestyle that they know they don't have the income to pay off, right? And then that ends up being a stress because they keep trying to transfer balances to here and there, and eventually is going to catch up with you, right? Because it's just you miss one payment, or you don't transfer the right balance, or something happens. So learn to save your money to buy the things that you want. And then also, when Mike mentioned earlier about credit utilization, people don't understand how important that is. That can help your credit score like immediately, like in a couple of months. I always tell people when they're rebuilding their credit is if you have a credit line, do not exceed. I try to keep my credit utilization to under 10 to 15%. Like that's what I try to do on my credit cards. However, the rule of thumb is 30%, right? So if you have a a $1,000 credit card, don't use no more than $300 a month on that credit card, because it's saying that you are a low risk person, because it's saying that we're giving you credit, but you're not using it, which means that you're responsible enough to know how to pay for things. So don't fall into the idea of I need to spend everything on my credit card every month, pay the bill off every month, so I can build credit. Use the cash if you have it to pay things off, and do not keep getting more and more cards. And I think Mike mentioned that earlier. Have 4 or 5 things. I think 5 is the safe zone, but do not have more than 5 open lines of credit if you don't need it. Like you said, a credit card, maybe 1 or 2 credit cards, a house loan, car loan. But if you don't need those things and you can pay them off, being debt free is great, right? So saving your money will is also is a great tool to kind of get around that pitfall of using credit.
And one thing I'd like to add, I say this in all of my financial education, is this: just because you can buy something does not mean that you can afford it. Just because you can walk out of the store with it or drive off the lot with it does not mean that you can afford it. And that's what tends to get people in trouble. So to Glenn's point, don't try to buy things that you can't afford using credit, because guess what? You'll wind up paying sometimes double or triple the price because of the interest that you have to pay. Not to mention setting yourself up for failure if one little thing goes wrong, and now those 30 days are starting to catch up with you. So
definitely, you definitely want to use credit wisely, and it speaks to the mindset and the behavior that we need to have in order to not spend more than we can afford. To your point, Mike. So and pay attention to our credit, right? So that we can approve it, maintain it, um, and not have to pay more for things than we should based on some poor credit decisions or financial decisions that have been made in the past. So the next question that we have, we're going to go into is what tools and resources are available for people to monitor, improve, and maintain their credit. In that, Michael, if you can share how people can contact you or your financial institution if they have questions. I'll turn the floor over to you, Mike.
okay, so probably the easiest way to contact me is via email, and that's MK Cheatham. So it's MKCheatham at comerica.com. And what I will do is, if I cannot answer your question, or if you need some information that I don't have readily available, I will transfer you or forward your information to someone else in the bank who can help you, likely one of my banking center partners. In terms of resources, annualcreditreport.com. That's annualcreditreport.com. On there, again, you have access to not only tips and tricks that we kind of talked about today, but also a direct link to the 3 major credit reporting agencies. Also, I would go to FICO.com. The chart that you saw, less the happy and sad faces, came directly from there. As a matter of fact, it's on the last page of my deck, because as Glenn mentioned, all of the credit reporting agencies, excuse me, all of the credit scoring organizations use generally that same breakdown. Your payment history, regardless of who you talk to, is always going to be the most important thing, right? Keeping your balances low is always going to be the most important, one of the most important things. So I would use FICO.com and annualcreditreport.com.
And if I could just jump in with 2 quick questions before you answer that, Glenn. So we had 2 questions that came in. One is related to hospital bills and how those impact your credit. Mike, do you want to speak to that?
Well, I'm not a specific expert in this, but there's 2 things I do know. Generally, hospital debt is okay until it goes to collections. Because one of the things I found out when my daughter was born prematurely and when my wife was sick is that hospitals don't start reporting the credit until they've gotten to the point where they don't feel as if they can collect the debt. And they're very flexible. I found that they're very flexible in terms of offering you payment arrangements so that they can collect the debt before it gets to your credit report. Now, once it goes to collections, that's when you have an issue. So I would suggest that if you know that you have a hospital bill out there that has yet to go to collections, reach out to them right away and try to set up payment arrangements. They tend to be very flexible.
Absolutely. Yep. And I would add
also,
that for student loans as well. Go ahead, Glenn.
And then also for hospital debt, one of the other things is sometimes hospitals, depending on who you deal with, have abilities to write off certain amounts of your debt. Like Mike said, if you tell them ahead of time. And then also another factor that you will find out is sometimes your insurance covers things. But what has happened is because you didn't ask them to send it back out to your insurance company. So I found at one point, even dealing with some, my own stuff and other people, but you would get a bill and you'd be like, oh man, I didn't expect this bill to be $1,500. I thought my insurance would have covered it. And then you just either ignore it or you pay it. One of the best things to do is pick up the phone, call them, find out what code that they use, and ask them to ask your doctor. And this is something you can do, is ask them to ask your doctor or the billing, is there a different code that we can bill this under my insurance for? Because what you will find out is that sometimes they just put the wrong code in, and then they'll change the code in the billing system, and then you'll get a bill back and you'll find out once they redo it, like, oh, you only owe $150. You're like, wow, I thought I owed $1,500. So please open those bills up. If you think they're high, reach out to the hospital, reach out to the billing department, say you have insurance that you feel as though they can cover this, and ask them to ask the doctor, is there a different code that they can bill it under? And it's so much easier to do that before it goes to collection, like Michael said.
And we have another question. Someone noticed that their credit score increased with TransUnion and Experian, but not with Equifax. And they're curious about why that is. And we know that not all organizations report to all 3 of the credit bureaus, but do you have any tips for that individual?
That would be the first thing I would do, is compare to figure out what's missing, because usually that's what happened. There's organizations that they don't report to all 3, so you may have something on the ones that are higher, and on the one that's lower, especially if it's good credit or where you've been making payments, that may not be on that report. So that would be the first thing I would do, is check to see what's there that's missing from the other 2. And then also, for that same reason, you may have had fraud on the one that's lower, or even just an accounting error where there was something that you had been paying on time or something that you paid off that the one that has the lower score didn't report. So you want to check for both of those reasons, which goes back to why you want to order a copy of your credit report.
And returning to Glenn, did you have any additional tools and resources that you want to share with people to help them monitor, improve, and maintain their credit?
Yes. So I know Mike was talking about the ones that he mentioned. Now, the one good thing that I will say that Credit Karma offers that you possibly can't do on your annual credit report is that you can go on there and you can dispute matters through their app. So you can go on there, and if you see something that's on there that you want to dispute, there's a little button on there. If you pay attention, to say dispute this transaction. Go on your credit. If you're on Credit Karma, go dispute things that's on your credit. That's one thing. If you're trying to look for other advice on what you can do with your money and how you can save, there's this one website, pennyhoarder.com. Great website, gives a lot of different tools about things that you can do. One good app that I use, that I personally use, that I think is a great app, is Experian.com. I was using that, before it really just got really blasted out there. But if you go to Experian.com app, they have an ability where you can do a boost on your credit score, where you can include like your cell phone bill, your water bill, and all those things that they'll put into their score to try to help boost your credit. So go on Experian.com and don't be afraid to do it, because if you do the boost, yes, it'll go into your bank account and it'll track your stuff. But what the boost will do is, if it's bad for you, you'll have an ability to reverse it within a month. So if it really destroys your credit, because I've had some people boost and their credit actually goes backwards, and they're like, "What happened?" It's like, you weren't paying all your bills on time. But if but if you think you're paying your bills on time more than your cell phone, the consumers, and all those things, put those things in there. Let the app do its work to increase your credit score. So go, Experian.com app is a great app to use. Penny Hoarder, I think I talked about that. Acorn is a good saving app. There's so many more, and that's why it's so important for you to get on that the CFI Building Wealth newsletter, so we can send out the slides that Mike and them mentioned earlier, to you, so you can have other resources available. And then I just want to also say, Renee, but thanks to Jason, he's also been fielding some of these questions. Our board chair, Jason Palantir, has been fielding some of the questions. Has been fielding some of the questions on the live chat. But Renee, go ahead, sir.
No, thank you for that. So yes, to that point, if you haven't registered yet, please register. We have a series of sessions that are coming up. Next week, we will be hosting our Financial Friday on June 19th, talking about small business insurance. Please tune in. And then the following week on June 24th, we will be talking about financial planning and wealth building for individuals and families. So please put those on your calendar, save the date. As I mentioned when we first started, we would be giving away gift cards to a participant and to someone who registered. So we'd like to announce the first winner for registering as Sierra Lynch Gibson. Please reach out to us, inbox us, so that you can get your prize. And then for participation, Miss Coates Chisara, and I apologize if I'm not saying your name right. Thank you for your participation in the discussion today. Please, again, inbox us so that we can get you your prize. And if you haven't registered already, please register, because that's how we're going to be getting the follow-up information to you. We'd like to thank Michael Cheatham for joining us, and Glenn Wilson as well for hosting this, and Comerica Bank for sponsoring this event.
Well, thank you. It was our pleasure. Thank you to Mrs. and Mr. Wilson, Renee as well, and Communities First for all of the great, impactful work that you are doing in the community. And Comerica is proud to stand beside you in your efforts.
Yep. Thank you so much, Mike. We appreciate that. And the other thing that I want to say is please share this, right? So this is great information for people to hear. share, share, share. I can't say that enough. You know, the best thing that you can do for anybody in your family that's especially asking you for help is share them this information and say, I'm going to, like, somebody cracked a joke the other day when I was talking about credit, and they said, can I share them a couple points? And I'm like, hey, you can come on here and I can show you how to get some points yourself. So please share this out. I see some people that's already sharing it. Do not just keep this for yourself. Share it to other people. Start building some accountability partners to be able to help you get through this process.
Absolutely.
Oh, and then look for the next event in the comments. It should be up here pretty soon. So, go ahead, Renee.
right.
Sorry.
That's it. Thank you for joining us. Again, please share. Please register if you haven't already. And thank you, Michael. Thank you, Glenn. Everyone, take care.
Thank you. Bye-bye.
Thanks.